Hi, and welcome to your Ichimoku Cloud update for Monday, December the 6th, 2010. And we always start off with the S&P 500 on the daily chart, and that's where we are here at an all-time high of the year, just barely. And here's a chart of the Dow on the daily chart, and not quite at an all-time high of the year, about 75 points below an all-time high of the year on the Dow. And it's been quite a strange pattern, to be honest. I haven't seen this very many times before, where you get this big move up here. This is actually quite dangerous when there's a massive gap up in the morning. It can show that people were too excited to get in, and then stocks can then fall down. But you can then see again here at this candle here, this is a hammer candle right on the cloud, and another candle the next day wasn't as good a candle, but then we're up again here. But bouncing off this daily cloud can actually happen quite often. And back again to the S&P 500. This is what I was a little bit worried about, and why I wasn't so eager to buy was if you look back here at the beginning of November, and also where we are now, we're at about the same level on the S&P 500. This is on the 240-minute chart now. But if I go back to the daily, looking way back here in April at about 120 on a SPY, the ETF, this is an area when things get really bad. Remember back in here, this is when we were buying the puts and we were shorting, typically on 3 moves, 1, 2, and then the third move. Here, we actually got out right about there. Just a small gain on the puts here. But we got some nice moves on these two here, trading below this daily cloud. But once it went above again, we weren't really going short at all anymore. But you have to keep in mind back here, this can act like a type of psychological resistance. And it sort of met it back here. It gapped up, but then it went through again. And now we have this area here, here, here. It's like a triple top. And I sort of want to see things moving up in this range here. It will then get a bit ahead of itself as well, ahead of the cloud here. But that's what I'm really looking for, is to move through this level. This is ACI, Arch Coal on the daily. This is what we do have a position in. And if I put the crosshairs up here at 30.73, this is where I wanted it to go through before we got in. So I like to go a little bit more than just exactly the breakout. That's why I went for 31. I think it was 31.02. And then as soon as it hit that, it rallied immediately. And then the next day, now we're up about 30% on the calls. So that's great. I'm going to do a little bit of more fine-tuning and write about what we're going to do with Arch Coal in the report. This is PBR, Petro Brasileiro, Petro Brazil, or Petrobras. And this is a stock that was really hot a few years ago, but it's been under a tremendous amount of pressure lately because the US dollar has been rallying considerably to the Brazilian real, and that has put a lot of pressure on this stock. And we're looking right now at the daily chart. You can see way back here. Let's go way, way, way back to the high, all the way up here at 54. This is when oil was hot. Everyone was saying, oh, the BRIC countries, oil, everything. You probably read about it in magazines. And that's why I just don't believe in fundamentals. I believe that it's the expectation that really matters, and are you ahead of the expectation or not? And if you would have thought Brazil was the next great big thing here, and it very well may be, back at 52, why would you want to hold a stock all the way down to 32? And then just, for years, going way back. There's no reason to do that. So here we are again. This is actually quite rare for me to buy something that has not broken through the daily cloud. But look at how many times it tried and failed. Here, fails. Here, makes it, fails. Makes it, fails. Fails. Something like this can only happen so many times until it finally breaks through. Here's the 240. It's broken through a little bit on the 240. Here's the 120. It's broken through on the 120. And it's broken through on the 60. Here's gold on the daily chart. Gold is looking completely fine. I would probably look to buy gold at about 1400 an ounce, because here again you have that double top thing again, and there's so many times it can reach that old level and then come down again. Making a living trying to time a breakout before it happens will eventually leave you bankrupt. It's not something that you want to do. That's why I didn't want to do it on Arch Coal, even though we could have done it, and it would have been more profitable in the long run. I've found that it just doesn't pay. It just doesn't pay to try to time these breakouts just a little bit before it happens. Typically, what I want though is a move up like this, and then the pullback, and I'm buying the pullbacks. We weren't trading gold that much recently. We were trading other things, however. But I don't always buy a breakout, but only in certain circumstances where there's really a lot of strong momentum happening in the stock. And if I look down here, I have this MACD up here. If I look down here, MACD only crossed over 3 days ago. So when you have something like that, you can go for a breakout. But when it has really strong momentum for a really, really long time, the breakout is typically just the last gasp, and it's not something that you want. So I don't make a real big habit out of buying breakouts. The best thing is a breakout and then a pullback or a very, very long period of consolidation where it can reach a number 5, 6, 7 times even. And then as soon as it breaks out, you can buy those sideways ones because they can be very powerful. Here's the euro. First time it's broken the daily cloud to the downside since way back on its fall from over $1.50 when it broke it down here at about $1.47. Since July, it's actually been trading above the daily cloud. Tests it here, moves up higher, now it breaks through. Now what you typically have is a rally back up into the cloud, and I'm looking at this Tenkan line right here, and it's at basically right at 1.363. So maybe 1.3625. If there's a rally, I would actually expect the euro to go right up to this Tenkan line, and that's where I would expect the resistance to be 1.3625. If you can look at that, if you are a forex trader, and then bring up the 1 minute time frame as well, look for something bearish on the 1 minute, or once it reaches 1.3625, as soon as it breaks the cloud on the 1 minute chart to the downside, then I would short the euro. This is the pound to the dollar. It's almost the exact same thing. Breaking the cloud and then into the cloud and then up here, the Tenkan line, right above there, I would expect a place where you could short it. But I think the euro is weaker than the pound, so I would look more at the euro than shorting the pound. Here's the USD Canadian dollar. Canadian dollar is very tied to oil because there is so much oil in the tar sands in Alberta. There's more oil than Saudi Arabia. But the way it works is that when the oil revenue is coming in and the price of oil is high, then the government's making more money, of course, because the tax on the gas is a percentage basis. And they're also making more money off the oil companies. But when that money runs out, then inevitably they run deficits, and that increases the money supply of the currency, and then the currency goes down. So we'll see what happens in the future when oil pretty much reaches a peak. Who knows how long that could be, 5, 10 years away. I would really, really look to short the Canadian dollar because inevitably the government will, well, we'll see what happens, but typically governments expand. They rely more and more on the oil money, and as soon as somebody comes out with some big type of program to get lots of money from the oil companies at the same time that oil is, let's say, $200 a barrel, then you could make an absolute complete fortune shorting the Canadian dollar. Here's the dollar index. I would actually really recommend getting approved for futures so you can trade the US dollar index itself, because then it's against a whole basket of currencies. It's sort of the opposite of what was going on with the euro. Moves up here to the cloud, now it's coming down to this Tenkan line. It's just pretty much the exact opposite. So we could see a bit of a rally here in the euro and a bit of a fall in the US dollar index. And then I would look to go the other way for a move back up here over to this area. And that's today's update.